Welcome to Legends of Data and AI. Each episode includes inspiring and actionable data and artificial intelligence insights from global leaders across industries. Your host, Dr. Usama Fayyad, was the first Chief Data Officer at Yahoo and is Chairman of Open Insights and Executive Director of the Institute for Experiential AI at Northeastern University.
Welcome, everyone, to another episode of Legends of Data and AI. My name is Usama Fayyad. I'm the Executive Director at the Institute for Experiential AI at Northeastern University and Chairman at Open Insights. With me today is a very special guest and a great friend, someone I've had the privilege to work with back in the days at Barclays in London. Since then, he has moved on from Barclays to take on many leadership roles, including at US Bank, where he was Chief Digital Officer after his being Chief Digital at Barclays. And now he is the CEO of Galileo, part of the SoFi group. With that, Derek, welcome to the podcast. And maybe you can say a few words about also your illustrious career before Barclays and kind of the things you've experienced at Barclays.
Thank you, Usama. It's great to see you again, my friend, and to have a chat about what's happening in the future. My background, I was raised in Utah in pretty small towns and entrepreneur from an early age, and then was privileged to be part of the team that started the world's first internet bank. We then raised some capital and started a second internet bank in the late 90s, early 2000s, early days of internet adoption of financial services. And then had a successful exit of that business, sold it to Barclays, and that's how I entered Barclays. And then had a great period of time raising our family overseas in London, Dubai, Madrid, before returning back to the States after almost 15 years overseas, and returned back to the States about 3 years ago. And it's great to be back and great to be able to talk with you about data, AI, and what's happening.
Yeah, and how could I have forgotten the days in Madrid and your role, your very big role at BBVA, one of the biggest banks in Spain for sure, and in Europe. Derek, you've had a career in payments and banking that spanned startups to large banks, and most recently, kind of that focus on fintech, although you've done fintech before, including startups funded or helped to be funded by Barclays when you did the accelerator there, with your role kind of super focused on fintech at Galileo and SoFi. To get us started, what do you think of a fintech as a term, since the term is broad and often all-inclusive of all things digital in finance? How do you think about fintech?
I think about fintech, and it really ties to the path of my career. It ties to how humans interact with technology and money. And that equation of human behavior, the individual, the collection of individuals, and the human behavior, and how human behavior changes with the interface or the interaction model that they engage with, whether it's face-to-face, whether it's through a desktop, whether it's through a mobile device, and whether that's a shared experience or whether it's done solo, DIY, do it yourself, as I use the term, and how that interface and technology enables that interaction model. And when I look at technology, it's the technology, as we refer to the glass, above the glass, but equally and more importantly now is the technology below the glass. And we'll get into that in today's discussion about how technology below the glass is changing that actual interaction model that people don't see, but it's that technology that plays a huge role. And then it's the monetization of that human interaction. And fintech is the creation of businesses that change the way how humans interact with technology and then how those interactions are monetized, whether it's through traditional organizations or venture funded startups that are looking to disrupt the traditional organizations.
So, when we met at Barclays, you were chief digital for Barclays Group worldwide. You effectively oversaw that function as well at BBVA, and you definitely were chief digital at US Bank to give you kind of a traditional US banking experience. I ask about that because I know many people wonder, well, what is the difference? How do you distinguish digital from fintech in the world of finance?
Yeah, the terms are fairly interchangeable. However, they're largely associated. Digital is largely associated with the transformation of traditional banking and financial services from a person-to-person, more shared experience into a truly digital experience, because many of the branch experiences or office experiences needed to be created in digital over the past decade. Now, COVID dramatically changed that experience for digital, as traditional financial institutions had to become digital because branches and offices were closed. And I've shared this a couple of times, Usama. One of the most interesting anecdotes out of organizations and technology and digital leaders during the early days of COVID was that in some of the more traditional banking divisions, the top 3 requests as they moved talent home to be able to work remotely, which seems like almost a decade ago, but was just 2 years ago, the top 3 requests was printers. And how digital is it if you're actually asking for printers to be able to ship to people's homes so they could print out documents that would then be exchanged? That, coupled with the fact that, in the world I operate in the payments world, 50% of payments in the United States are still either through paper checks or through cash, which is remarkable. And we can come on to that later. But digital is largely associated with the transformation of traditional organizations and what we refer to as that transformation equation. Whereas fintech is typically applied to those that are seeking to disrupt, typically narrow business lines, focused on the end user experience, creating an amazing end user experience with new technologies that are not tied to legacy technologies of the past. And at the same time, you see the traditional banks starting to play a big role in fintech. The other term that isn't included in there is the tech fins, which are the big ecosystems, right? You got digital, you got fintech, you got tech fins. And the tech fins are those that are large traditional brands, ecosystems with billions of users, and companies like you've worked with and companies you created in the past. Big ecosystem businesses with billions of users that they see the interactions of those humans on their platform and then seek for ways to monetize them. And obviously money movement on the platform is a big play. And so we see tech fins playing a key role in the evolution of financial services and how humans and businesses interact with money.
Yeah, that's a great observation on tech fins, an often forgotten huge player in the space. And I fully agree. I often think of digital as in like paying the technical debts of the past. Banks and other financial institutions should have digitized when they started thinking about it 60, 70 years ago, and they just let e-commerce and other things kind of leapfrog them. So a lot of digital is about catching up, and a lot of fintech and tech fin is about the future of
let me give you a data point on that, Usama. So about 80% of the financial institutions in the United States, there's about 6,000 traditional financial institutions in the United States. About 80% of those financial institutions today operate on technology below the glass that people don't see, core banking systems that are the books and ledgers that keep track of how much money a customer doesn't have, and how it moves in and out, how they spend their money. That core system, that system of record, is written in COBOL or 40-year-old language. One of our clients, a big fintech here in the United States, created within the last decade, operates on 40-year-old fork code in a language written in mumps. Now, I don't know how many people you know today can write in mumps. I didn't even know mumps existed at this point, but so much of the future of fintech is not just about that sexy end user experience, but it's about the technology that enables the creation and the unlocking of data that creates that smarter, more intelligent experience. And the fintechs, to your point, are those that are not as tied to the legacy. They're able to make those decisions on the future. And that's why the majority of neobanks in the United States have come to us to create on our platform, because it is a newer technology.
Yeah. So let me shift gears into another area where kind of you've been a leader over time, and you've seen a lot of these kind of advancements, which is, you know, a world where AI is playing a bigger and bigger role in everything we do. Of course, your angle on it is things related to payments and fintech. But in a world where getting any pragmatic AI to work requires machine learning and data science, and therefore, you know, axiomatically requires data to be managed and used as an asset, you often find that data is forgotten, overlooked. Most organizations end up wanting to do AI and struggling with getting the right data at the right quality and the right granularity to enable AI to work. Why is that so, in your opinion? Why are institutions failing to think about data as they think about AI and the future?
You know, it's remarkable because so many leaders, CEOs, recognize the need for data, but as it trickles down into the organization, it's just a change in the way businesses operate. It's a fundamental operational change, and when you're changing, transforming organizations, getting that into the breadth of the organization can be a challenge. As I've worked throughout my career, and I think we've talked about this, you and I, in the past, we use this concept of the 5 C's of data. And that is the recognition and leaders, operators, individual contributors understanding their role of how data can change and how it can create businesses ties to those 5 C's. And the first is capturing data. And in traditional financial services were organized around products, not around the human. And so much of data today is around connecting data back together around that human rather than across product silos. And you and I experienced that together in stitching business units together across products. And that data sits siloed within products or institutional organizations. And so looking at how data is captured at the point of interaction and where it is captured, how it is captured, is incredibly important, both at so many different levels. The second then is the cleaning or the cataloging of that data. And you would know this better than I because you operate and you're the guru in this space, but I've heard and have talked with many gurus in the space, and that Refinitiv is an example, one of the world's leading big data companies, now part of the London Stock Exchange. They have publicly stated that they spend $8 cleaning data for every $1 capturing data. And they're an ecosystem data business, right? They're capturing a lot of external data, cleaning it, cataloging it. And so there's an enormous amount of cleaning that data exercise that needs to be invested in. And then after capturing, cleaning, then it's caching. And for over a decade, there's been a lot of discussion around the need to, or there was a lot of discussion around the need initially to create these data lakes. This concept of a place to store the data in a safe place, to cache it, right? The challenge with connecting all of that data into one massive data lake is that it gets, maybe it gets moved into the data lake. But then who has access to actually, what is the 4th C, call the data? And in the financial services industry, a few select institutions have measured how much they're actually calling that data and where the data is cached. How do they actually call the data out of where it's safely stored, and they can show regulators that it is safely stored? To call it back to that point of interaction, that glass, that app, that mobile experience, or the website is the 4C. And the majority of financial institutions today, PwC did a report so that 50 basis points of the data that is captured is actually called.
Wow.
In my experience, measuring this across large financial institutions and across clients, is that if an organization is calling about 15% of their interactions are calling data that they have somewhere else in the organization, that's pretty progressive for organizations today. So that's an 85% opportunity in the financial services space from leaders in the space, recognizing it as an opportunity. And the last is the actual connecting it back into an integrated experience. So I don't know why exactly, Usama, but those 5 C's are 5 C's that we use to work with emerging fintechs and some of the biggest banks in the world that are seeking to become more like a fintech. And using that as a framework we find helpful.
Yeah. I really love that framework. And the connecting part is kind of a critical part because that closes the loop and allows you to learn more. The one thing I would add to it is somewhere you need to figure out how to put a 6th C having to do with the human providing feedback, human in the loop AI, which is, I think, the way to go. But
100%.
The 5 C's are great. So can you share a story or two in your experience on how machine learning and data science were transformative to an organization or business? What do you consider as the really convincing use cases that kind of make it a no-brainer that, hey, it's very important to be able to do this stuff?
Yeah, there's so many examples, whether it's across operational, financial, behavioral, empathic, and or the human behavior aspects of how data, AI, and ML can be used. Some of the most powerful examples are, one example is out of Spain. The bank I worked for in Spain created a product that brought together through open APIs was to be able to look at the first data point is that the biggest stress in people's life is money. The biggest purchase in anyone's life typically is a home or an apartment, and therefore the largest financial product that we as individuals typically secure is a mortgage. So how do you help a person with the biggest stress in their life, the biggest product that they will secure, and how do you help them move upstream into that interaction model where AI and ML can really help? So by looking at through open APIs as the data sources that existed outside of the financial institution, this company, which was BBVA, we were able to look at the real estate data that's available, to marry that with bank data, and to be able to help customers by simply taking their phone, walking in Plaza Mayor and or any plaza in Spain, to be able to take the phone through AR, be able to look through the brick of the apartment building to identify where there may or may not be an apartment available. And not only is it available, but then all of the attributes that you learn through open APIs through the real estate companies to understand what's available, but then to marry that with the institutional knowledge of what that customer can afford, bring those together in an experience at the point of when they're out actually on the street, and to bring that forward to them to say, this apartment is available at this price. A mortgage could be secured. You could bring a down payment and close on a transaction within 2 weeks' time. It was absolutely transformational. Accelerated the NPS scores for the end user. We're happy because you're not just solving one problem, but you're anticipating that next level of question, not one, but two, but three questions ahead to help the end human user, was hugely transformational. Another really basic for traditional financial institutions, Usama, was the simple measurement of what a human can do DIY versus what they need to talk to a human. This has operational aspects to it, huge financial aspects. What we found was that by simply making the features and capabilities available and anticipating what those features would be on a 1 or 2 taps on their mobile device, had huge operational capabilities and benefits associated with them. that translated into a 20% cost income ratio versus a 60% cost income ratio.
Yeah.
Now, associated with each of those taps on the glass, perhaps the most powerful example of actual AI and ML, Usama, is around fraud. And taking the data sets about how humans, how businesses, and how money moves, and how money is called, by developing models and leveraging data to identify fraud, is perhaps, and done with one of the largest financial institutions in the UK, had some pretty profound impact on fraud identification.
Those are very, very good points, and amazingly fundamental to transactions. I mean, what would make more sense than removing the middle person, removing that unneeded manual intervention by employees who could also introduce errors and issues, and creating a better experience for the customer. So, your career is so rich and so varied. I mean, at Barclays, at 320, now it's 330-year-old British bank, you were, nothing short of a force of nature trying to bring innovation and digitization into a very large organization. But one of the things that was really outstanding about your work there was kind of launching the Startup Accelerator, which started out as the London Escalator and then turned into Rise. In bringing startups to work with a large bank, you did that, also continue to do that at BBVA, to try to kind of get that innovation and that new DNA in. What would you consider the success and failure of these efforts to get large organizations to have, some innovation impact by working with small startups? It doesn't always work.
No, it doesn't always work, but it takes openness from leadership to recognize that these startups are the leading indicators of the disruption to the industry that's going to happen. And by looking at what startups' business models, the talent, how they organize, the problems that they're attacking, by looking at that and getting literally thousands of data points of these companies was more valuable to us than getting a large consultant's view on the technology disruption in the industry. Because these companies were coming to us and telling us there's 500 to 1,000 companies wanted to apply to work with us to disrupt our business model. And that was magical. So the data associated with the insights that came from learning with those companies was fantastic. Perhaps the most powerful element was the cultural transformation. And I will never forget when we took the CEO of a large business line of the company, brought them into the physical space where these startups were working and were seeking to disrupt their business. And the physical transformation that came over that CEO of that business when they saw how the startups worked differently than his suited and booted bankers was a cultural moment I will never forget. And it became one of the greatest cultural transformation programs in the company. Now, the secrets to success on it, though, were obviously having the leadership support, but then also recognizing and sitting down and strategically identifying problems or challenges that the organization wanted to learn more about, and being open and humble enough to recognize that we didn't necessarily have to have the answers. And that's huge. That's huge to recognize that. But then after selecting the companies, there were a couple of small ingredients that had massive impact. And the first was simply assigning a sponsor for each of the startups. That sponsor's goal was to get to a POC with that startup to test out their technology and their idea as to whether it's valid or not. And then the last element was actually changing the way that the large institution engaged with startups, changing the sourcing and vendor contracts. Those three ingredients, more than anything, accelerated the pace at which we were able to innovate, create new products, bring data into an actual viable asset that we're using within the company that had transformational impact on the company across institutional businesses, corporate banking, wealth management, as well as the personal banking businesses.
Yeah. No, and I remember also, one of the big impacts you've had is kind of changing the way employees get credit for actually working with a startup and taking risk. I mean, you, Anthony Jenkins, our chairman at the time at Barclays, were kind of very big supporters of this. And it's definitely a culture change when you change incentives and you tell people it's okay to take a risk and it's okay to work with a startup and then achieve huge value from that.
Yeah, another awesome component out of it was we had one company. We started to do this with internal ideas. We had a woman by the name of Diane Paredes had an idea in the institutional bank to create software to solve regulatory problems. And so she joined that accelerator program and we spun the business out. That's a great success.
Yeah. So let me shift to one area that always mystified me. You were always a big fan of deploying AI to help personal finance assistants by leveraging data, AI, and even chatbots. I remember a few experiments we've done together. But it always hit me, why have we not seen major uptake of the PFAs? It seems like such a natural application, yet it never really took off at scale. Why?
It hasn't taken off yet. And then to me, Usama, it comes back to the opening comment around humans. Your point on humans in the loop and human interaction, but it really comes down to trust. And does the human trust the PFA to guide them, to give them personalized, valuable information that they trust a PFA more than they trust another human? Because life, for us as humans, we have to make lots of decisions. And behavioral economics teaches us that humans don't like making decisions. So how does data presented in a way help a human make a decision when they're in an operating model if it's just them and the glass? So many decisions, financial decisions in the past, have been made by we as humans displacing that stress onto a trusted advisor. Yep. PFAs haven't taken off because humans don't trust a PFA more than they do themselves or another trusted advisor that has been a banker in the past or someone that is their relationship manager. But I would draw parallels, and you know this better than I, so I'd welcome your thoughts on this, but I would draw parallels to the PFA to the automotive industry. And as we've looked at the evolution of data within companies, it starts with digitally making things available. That's the first concept of DIY. It has to be available digitally. The second is starting to measure how smart or intelligent an interaction is by is data used? And we touched on that a little bit by the 15% of interactions, right? But the third piece is this autonomy, this self-driving bank. Because to use the same analogy of the automotive industry and Google Maps, and I drive an hour and 5 minutes to the office through the mountains, and I have 3 different paths to go. And my maps that I use tell me any given day, which of the 3 paths is the most efficient for me to get to. So I trust that, right? I trust that to get me there. That same level of trust hasn't been adopted in PFAs yet. But in the automotive industry, there's 5 levels of autonomy. And I take those 5 levels of autonomy and tie those back to 3 human behaviors. And those 3 human behaviors are feet on, hands on, mind on. The first 2 levels of autonomy are about taking your foot off of the gas and trusting that the vehicle is going to move you there. And that's basic. We've gotten to that. That's been around for years, right? The second level that we're all kind of going through right now is taking hands off the wheel, level 3, right? Yeah. And depending on what type of vehicle of an end level of autonomy and individual owns, humans are starting to trust that vehicle to move them, right? But that comes to taking your hands off the wheel for a period of time. The last one, though, and if you've ever driven on the Autobahn for an hour and 20 minutes going 180 miles an hour in more than a level 3 vehicle, your feet are off, your hands are off, but your mind can never shut off.
Yep.
You're constantly on. And by the time you're done with that, your mind is shattered. You're exhausted. So how do we take the technology that leverages data, that creates the experiences that we can, through AI and machine learning, trust the machine, trust the path of a PFA to get us to the destination we want? And maybe there's 3 paths, maybe there's 1 path. I would suggest while there's technology, while there's data, while there is this sophistication of machine learning and AI, it hasn't gotten to the point where the human trusts it enough, Usama, and that's what I would suggest.
No, I think your answer is not just right on, but you go to a core issue that is huge in AI, which is how do you achieve trustworthy AI? How do you build that trust? Which is one of the big future challenges. We're definitely looking at that at Northeastern, at the Institute, and many places. Huge problem. Let me switch back to fintech for a moment. When we talk fintech, many people think about blockchain, DeFi, cryptocurrencies. What's your view on what's been happening in those spaces? You know, they keep going up and down and in and out and all that good stuff. I would love to have your view as an insider.
Yeah, so back in the day, back in 2015, we went out to the ecosystem as part of that accelerator program and invited all of the disruptors in the blockchain space to come to London because the US had threatened to potentially make Bitcoin a currency. And so there's a flock of talent that wanted to come to London. So we just opened up a space in 2015. We had a great group of people, the disruptors at that time. And I continue to think about this space in a couple of different ways. Is one, the advancement in computer science is phenomenal, and the technology that is the blockchain and the associated technologies is just absolutely astonishing. The movement, the second is the movement of value across that blockchain, and how value moves, whether it's data, whether it's a currency or whatever it is. But then the third level of that, from technology to the value, is the actual currencies themselves. And without getting too technical into this, Usama, we could go there, but one of the greatest aspects of this is the potential for inclusion and access. And I go back to our days together and working in emerging economies around the world. I had a lot of friends in Zimbabwe suffer through the challenges of hyperinflation, and seeing an economy that goes from printing a $2 trillion note to the $5 trillion note within 3 days to the $10 trillion note to then the $100 trillion note. And then to have that local currency be zeroed out and replaced by another sovereign currency or 3 sovereign currencies, and that you would have to pay for dinner before you finished your dinner, you paid for your taxi when you got in the taxi versus getting out of the taxi because of the hyperinflation associated with it. I think the currency aspect of a cryptocurrency has great potential application and provides access to the financial system in a way that can be hugely beneficial for people all over the world. The world of DeFi is another extension of that, and really excited about where the applications that are being developed in DeFi will actually give greater tangibility to this ecosystem, and really excited to where that's heading.
Yeah, and by the way, Derek, straight to your point, in the tragic example of Afghanistan, where they cannot print their own money, they're dependent on the world outside, and the world outside is now forced into, essentially for a variety of political reasons, total boycott. It's a tragic situation where people the food is available, but people cannot buy it because the banks cannot issue the money that the people will need to use to buy the food. And what an amazing place where if we had true digital currency, it would address so many problems. But anyway, the world is full of tragedies, and hopefully we'll see good advances happen. Let me, I know we're running out of time, and actually we could talk for a whole other hour, but let me ask a couple of other questions to wrap up. Because of the dependence of AI and ML on data, we started seeing kind of strange exploitations. A famous example is the Uber drivers figuring out that if they all kind of took time off at lunch hour, suddenly you get surge pricing, and they started doing that with collusion. What do you see in the payment space when it comes to exploitations like that? Where does all this take us?
I don't want to be redundant, but it comes back to human interaction with technology. Uber drivers, the humans, identified an opportunity to leverage an algo to help them monetize their work. And there are opportunities for us to better understand how humans interact and how money moves through the financial markets and the financial systems. We are fortunate that we do have regulations in place that do protect the majority of how money moves throughout ecosystems. But payments is one of those areas where tech fin, like an Uber, start to play in how money moves. And then you start to look at not only how the drivers play a role in this, but then how Uber and others can provide financial services products to their drivers to be able to enable that money movement. But so much of it, to me, the Uber example that you highlight is the role of having a human in the loop. And what role does that human play in that actor, whether it's a good actor or bad actor, that human in the loop of the interaction model with technology and how data is leveraged to create a better experience for that customer.
Yep. Oh, good point. Let me wrap up with one question that probably covers several areas. In your mind, what are the big challenges that you would be interested in seeing addressed by the field of AI? And probably related to that, what should higher ed be doing, especially towards kind of helping make AI more mainstream, make it more affordable, more democratizable, and more usable by companies?
So let's talk just a minute about financial services, but there's areas that I personally have interest in outside of financial services that I'd love to see the application of AI, and that AI can play a huge role. And in financial services, it's about inclusion and access, and providing access to the financial markets in a way that not just in markets like Mexico, 50% of the people still don't have access to the traditional financial system, let alone financial markets. And so how do we create a way that allows individuals to provide that access for them to the financial system? There are all kinds of ways to do that and how do we do that in a way that is safe and secure? So the application of fraud, we're just early days on the application of AI on fraud, but that is and there are so many aspects of B2C, B2B, B2X around fraud. There's operational aspects in financial services, but let's park financial services for a second because we talk a lot about that. Areas that I'm personally interested in that I'd like to see the application of fraud is that in the Western United States right now, one of our biggest challenges is water and fires. And we're currently in a drought. We're in a 20-year drought. We're seeing reservoirs drop to a level that we haven't seen in the past. Yep. And some of that's due to climate change. Some of that is due to various different factors. I would love to see the application of AI to see how we as humans and how we as a planet can conserve water in rural parts of the United States. There's a my father-in-law used to say that in the state of Utah, where I live, you don't buy the land, you buy the water, and the land comes with it.
Yeah.
And so AI application of how we can conserve water, use water, so that at 2:00 in the morning, when my water turn comes down the ditch for me to be able to use on our ranch, I don't have to have somebody physically go out and open the head gate or close the head gate for that water, but ways for us to preserve water and get the most out of water as an essential source of life would be a great application. There are many, many more, but I don't want to take up too much of your podcast here, Usama, but that's one area that I would personally love to see more application.
No, that's what a great area. And this is one of the reasons that AI and climate and sustainability is one of the focus areas for the Institute of Experiential AI, where I actually think there's a lot of impact that's good for society, good for humanity, good for the technology that could happen. Derek White, CEO of Galileo, the infrastructure and payments technology arm of public company SoFi. Thank you so much for giving us the time, the insights, and kind of sharing your rich experiences and history in leveraging digital AI and data in the world of finance writ large.
Thank you, Usama. It's been a pleasure.
Thanks a lot, Derek. And with that, I'm Usama Fayyad, Executive Director of the Institute for Experiential AI at Northeastern University, Chairman of Open Insights. I thank you for attending yet another episode of Legends of Data and AI, and look forward to be talking with you in another episode soon. Thank you.
Thanks for listening to Legends of Data and AI. We hope you enjoyed our deep dive into the world of data and AI. If you're keen to learn more about making data and AI work in the real world and in any organization, join us next episode and subscribe to the podcast. As always, you can head over to open-insights.com to sign up for our email list, learn more about the work we do, and have access to data resources. See you on the next podcast.